Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Starting a fresh week, the Australian dollar continues its bullish trend, consistently creating higher highs and higher lows since the base around this 66-cent mark. Its rival, the US dollar index, which measures the greenback strength against a basket of 6 major currencies, remains weak, as it now standing at 104.25. Increased risk appetite amongst investors will likely to continue this week after last Thursday's lower than expected US Consumer Price Index, or the CPI, rise in expectations for a potential US Federal Reserve interest rate cut in September, with speculation suggesting it could happen as early as this month. Meanwhile, on Friday, the US PPI, or the Producer Price Index, for the final demand in June rose to 2.6 year-on-year, with the core PPI, excluding food and energy, increasing by 3% annually. With the CPI and PPI, these reports indicate a broad cooling in the price during Q2, falling below forecasts. Looking ahead to this week, traders will be closely monitoring the Australian unemployment data on Thursday. So looking at the technicals, we can see the topside target still holds around 68 cents. That could extend on to 68.5, with any pullback likely to be shallow around 67.35 and the potential base now seen around 66.80. The euro dollar also maintains a firm footing, gaining momentum and now reaching its target of 109. It is assessed that a break here would give further scope on towards 109.55, but do be on your guard a little bit as profit taking may emerge. For the euro, this week's focus will be on the European Central Bank, or the ECB, interest rate announcement, which is widely expected to remain unchanged at 4.25%. Also this week, the focus turns to Federal Reserve Chairman Jerome Powell's speech at the Economic Club of Washington, D.C., with expectations for audience questions. Any pullback likely to find support around 108.20 and slightly firmer around 107.80. The Japanese yen strengthened for 2 consecutive days now as speculation about a potential intervention from the Bank of Japan. Though no official confirmation supports these rumours, nevertheless the given price action, and can see rather volatile, has plummeted through the 160 level and through the trend line and now poses a further threat to the downside as it looks towards 158 figure 25. A break beneath there will give further scope and look towards 156.40.60 and then 154.70.90. When the upside attempts likely to struggle, with the resistance seen roughly around the region of 159 figure 50. Sterling, well, the market has performed very bullish as it now posts a fresh yearly high, which is seen roughly around 129.69 today. In light of how this pattern has performed, there is a little bit concerned that profit taking could emerge and therefore see a pullback at the start of this week to around 129.15 to 128.5. Nevertheless, from a broader aspect, the call was at 131 and it still looks like we could even see that. So do be on your guard, and it's important to closely monitor signals and adjust your risk management accordingly. After surging through 2,400, gold's taken a slight pause. Nevertheless, the technicals are bullish, but there is a little bit of divergence to the bear case, but the ADX is still strong, so therefore I won't rule out further strength this week that could see eventually reaching its target, which was back in May around 2,445 to 55. Any weakness, support now seen around 2,388 to 90. And the bears are back when it comes to oil and weighing on this key support level of 80.40. A break there would give further scope to the downside and look towards $78.80 or maybe to where this outline here of 77.40.60. Any upside attempts? Well, the market has clearly been struggling around $82, so this is likely to serve as a short-term cap for the start of this week. Well, that's a wrap. Thank you for joining me, and as always, look out for the interest rate report, and I hope you enjoy the great start to the new week.